Everything has changed since 2020, and if you're investing the same way as you did before, and you are doing the same thing for your job as you did before, and you have no new plans, you've got an issue. And I'm going to show you today why that is the case. Let's move into it right away. No time to waste. I'm going to cover a few topics, and I want to really bring this around to discuss how we are entering a zone in which everything is different than it was just a few years ago, whether we like to believe it or not. Amid food inflation, more shoppers turn to dollar stores for groceries. I had highlighted back in 2019 the fact that the number one store that was opening was the dollar store. The stocks of the dollar store were doing good because so many people were utilizing these dollar stores for anything that they could get. And now today that trend has continued. You see people that are cash strapped. They are using their credit cards and the whole thing that I always talk about. There's a lot of individuals out there who have more money than ever before, but certainly we see a growing number of people that can't afford the basics. The dollar stores being one place that people are definitely shopping more at today than they were before, and yet we see the prices of those goods at these places going up higher. Now, there's a lot in here just talking about job situation, budgets, and so on. One distinction is that tech companies rely on corporations, not just consumers, for revenue in areas like advertising and cloud computing. Another reason that they're not benefiting as much as some industries could be because the consumer is clearly a greater portion of the discretionary spending on experiences rather than goods. So when you factor that in, it shows us where the increases in costs are and not necessarily factored into any inflationary stat that you're going to see. Hard budget choices. There's still plenty of things that could derail consumer spending. The inflation that we've had from before isn't over, even if it's easing, and about 40% of Americans in January said that it was somewhat or very difficult to pay their usual household expenses. It gives us, just a look at what's been happening recently. These costs are not going down for a lot of people. Yes, they're spending on their credit cards and so on, as they say here. And we do watch this becoming an issue, not just because, oh my goodness, I'm so concerned about Starbucks and McDonald's and all these places. No, it's because when these businesses are not getting those same profit margins as before, they have to cut that. And how do they do so? Usually it's by laying people off. The difference this time around, and I'll mention it here, is that when they go to lay people off, they no longer need as many workers on the way back. There's always going to be an economic cycle, but it's on the way back when they've got Flippy the robot, when they've got Chippy the robot, when they've got AI doing the tasks that a human being was doing before. So maybe after a 2-year period, that company starts hiring spree again, or normally would. This time around, things are different. German postal workers to strike on Monday and Tuesday in wage push. This is something that's been an issue. You look at Germany, you look at the UK, even in the US as well. A lot of this, people are pushed to the edge. They're saying, I cannot afford my life. I need to get paid more. Look at what's happening with France. They're saying, we do not want our retirement age to be pushed even further, even though this is what's been happening all over the place. So we are watching time and time again for different reasons, people that cannot make their ends meet, and as a result, you look at them being pushed to this civil unrest and a general theme globally where we watch, societies crumbling. This is a breakdown with the UK and just giving us a look at the corporations, small businesses, right? Total company insolvencies moving to levels we haven't seen since the financial crisis. That's very important. Creditors' voluntary liquidations as well. It's all the same thing. Businesses are going under right now. Increased costs, inputs on, their supplies essentially, as well as like their energy costs, the rent for the place that they have, but also their employees. So their employees have to get paid more or they literally won't work. That's the way this has been happening. The rates, even though it may not be enough for those people, the business owners, the small business owners are really getting crushed. And that's a fact. If you look at what's going on Amazon, I can tell you right now, my fees had gone up substantially, substantially. And what does that do? Well, it squeezed my margins. And that's important because what do I now have to do? Well, I have to make that decision. Do I increase the price? If I do increase the price, there's always somebody out there that's willing to undercut that price, and then it's a race to the bottom. I don't do that actually. My products are priced twice as much as my competitors, but the point is, for a lot of people, they get squeezed down, and then for some people, they just say, forget it. That's the way it goes. Okay, look at this, layoffs. We've been seeing them a lot, and right now for 2023, there have already been 88,000 tech layoffs. That's one factor, but look, you don't have to worry, right? Because the NSA is wooing thousands of laid off big tech workers for spy agencies' hiring spree. Like I said before, the government has an unlimited, at least they believe so, an unlimited checkbook. Watch where the government spends their money as an investor. This information is what you need to take home. If you were doing things the way you were before 2020, it's going to be a problem. I've got more for you. Stick with me, okay? Take a look at the next aspect here. As you can see, the oil market faces production issue in 2024. Analysts sees oil rising above $100 a barrel, says the erosion of production capacity is a serious problem. In the United States, all the fracking was happening. This was the big thing for a while. Now you really don't hear much about it. Well, for that circumstance, a lot of these businesses are saying, look, if the government's going to try to put us out of business, why are we going to do more? Why? It just doesn't make sense. At the same time, for a lot of the companies, oil needs to be priced at a high dollar, or else it's simply not worth it. Okay, so there are some companies who can be profitable, $40, $60, but for some it needs to be much higher. And so if they're at that borderline kind of, it's not really worth it for them, or they might not really want to put too much of an investment into that right now. What does this mean? That means that the consumer, if they've got to buy stuff, anything, is going to be affected by oil, transportation, and so on. That means there could be a slowdown in the economy, okay? That's just the way it goes. If it's over $100 a barrel, that really does have an impact. What Europe risks with wider sanctions on Russian oil. The sanctions have been going on all over the place, but I'll show you in a second how it doesn't really apply all the time. I mean, there's so many loopholes and things in this that it's just a matter of fact, the way that this goes. But anyway, the point is, what we look at with oil in this way, I mean, they just cannot find an alternate supplier. That's just the way I've seen it here. They want Qatar for the gas. Japan wants somebody else. Are they going to be able to get it? Not anytime soon. What does that mean for you? Higher prices. Higher prices equal slowdown in the economy. You've got to figure out, if you're a small business owner, if you're just an employee looking at the situation, what input costs does your business have that are unlikely to go down? Like, are you going to be squeezed out? At the same time, the reason why I've been telling everybody about e-commerce is the fact that, or having some sort of online presence, is that we need buyers all around the world. This is really key. If you do not have buyers all around the world and you're focused on your local area, well, what happens if you're like those people in Europe where, oh, now my input cost because of the gas price had gone up so significantly, well, now I can't do business anymore. That's a big problem, right? So you could see how one simple thing could wipe out an entire business. That's why I say online presence would really help out a lot. Okay, and this just really quickly, upstart Indian shipper helps get Russian oil to the market. So we see that there's so many different loopholes, and India has been buying, just India alone has been buying so much oil from Russia since the start of all this, since last year. The last aspect I want to cover really quickly, a lot of points. Adani's crisis points to big risk in India's net zero plan. India is turning to powerful billionaires to meet their clean goals. Storm hitting Adani may undermine investor confidence in India. Because they said there was fraud, they said there was a lot of allegations behind this. Who knows what will come out of it. But this is a concern because I believe that what I've read anyway, Adani and the government, Modi specifically, They were really, really connected. So, one hand and the other, I'm interested to see where that goes. China's developers flagged the worst earnings in years on historic slump. About 60% of the mainland listed firms expect losses for last year. Warnings signal grim reporting season for real estate industry. China's real estate industry is a $62 trillion industry. It's massive by any stretch. I've talked about it before. I think it's something along the lines of $150 billion in distressed debt. So that's a big number as well. And they have to figure something out rapidly, like in 2023, or this is going to be a major concern for a lot of these different companies, and things will start to unravel. The government cannot bail everybody out. They had to pull Evergrande off the, basically halt the stock because it was collapsing and basically had collapsed. So watch that very closely here. Real estate isn't always a sure thing. We know this to be the case. This is just one example. One example. People really, really got screwed over in these cases here. And then I just want to show you that, again, with that trend, look at this. Oh, Impossible, this is Impossible Foods plans to lay off about 20% of workers. The stock got, really down. There's all these different companies that like this producing meat-like substances, I guess you call that fake meat or whatever it is. And that's something that, was such a hot trend. Like anything that was just fake meat, the stock went crazy. You can't have that same pattern repeat. And the video I did prior to this one, I highlighted that. Like we're seeing kind of the same trends. Very concerning. Don't get into that. Don't. World's biggest pension fund posts loss in longest losing streak in 2 decades. Talking about, of course, Japan's government pension investment fund. Watch out, Japan. Stay away from Japan as far as I'm concerned. They cannot produce anything now. They are consuming themselves. You got to look at where the money is going. Where is the money going? I just checked the stats right today. Look at Dubai's real estate. Dubai's real estate hasn't skipped a beat. In fact, it has accelerated, because a lot of that money is moving out of different places, moving out of places in Europe, moving out of Russia. It's doing this at a time in which there had already been so much growth. So you got to look for that in your local market as well. Sometimes, this part of that city is not doing good, but there's like a satellite city, an hour or two away from it, and there's a lot of potential there. So this is what we have to look at. We can do that locally as well as globally. And that's just a couple points. If you found this video informative, you've got to hit that subscribe button down below, because each and every day I bring you the latest and greatest information and you don't want to miss it. Definitely subscribe. So I will see you tomorrow. Take care.